this was going to happen. And I'm very curious to see what the catalysts are that's causing the market to finally do what a lot of people thought that it might do. I wasn't the only person who felt that way. Most experts that I respect pretty much felt like the chances of the market going down were greater than the chances of the market going up. And that tends to be what happens when the market just does so well for any period of time. I mean, you've had this great stock market and all this money's been getting made for the last few months. So, after the sunshine, you're going to have some clouds, you're going to have some rain. So what I'm going to do is read some of this to you in terms of what CNBC is saying about today's most recent market decline, 300 points. That's pretty significant. And then I'm going to sort of talk you through what's happening here and how I plan to respond to some of this. All right, so it says here in CNBC that the Dow Jones Industrial Average pulled back Tuesday as investors struggle to regain some positive momentum ahead of the release of key U.S. inflation data. The 30 stock index traded 309 points lower, or 0.8%. The S&P 500 declined 0.7%. Nvidia dropped by 4%. Other mega cap tech names like Meta and Netflix were down 2.3%, 1.9%. Amazon actually ticked up a little bit. So Amazon is actually the only mega cap tech company that hasn't hit a record high this year. So Amazon is, let's see, it looks like they either hit. Yeah, they're very close to hitting their record high. I was going to say they either hit it or they're close to it, and that's going to be kind of a big deal. And so it says here that the March Consumer Price Index report is slated for release Wednesday at 8:30. So 8:30 a.m. Eastern, it looks to me like they're going to get more data on inflation. Let's see, they expect inflation to have increased 0.3% in March on a month-over-month basis. Investors will keep a close eye on the data as they search for clues on when the Federal Reserve will start cutting rates. Right now, it's a coin toss whether they'll decrease rates in June, according to CME Group's Fed Watch tool. Quote, the market has been treading water over the last week or so, worried about the Fed and its commitment to lowering interest rates, said Sam Stovall, chief investment strategist at CFRA Research. A stronger than expected CPI reading at both the headline and the core level could end up triggering a catalyst for correction. Whew, a catalyst for correction. A catalyst for correction. Now, here's what I want you to do. I want y'all to tell me, what do you think a catalyst for correction means? What do you think that sounds like? What's a catalyst for correction? Let's do a quick. I'm gonna see if how much of all this conversation sticking. What do y'all think a catalyst for correction um means? Okay, Errol says a market moving event. Okay, good answer. Natasha, market crash. Yeah, bear market. Joni, yeah, a sign the direction will change, or the market will change. Yeah. Elaine says correction. Okay. Lenny, timber. There we go. I like Lenny. Lenny, you win. You got the best answer. Yeah, timber. Basically, what they're saying is they're saying, oh my God, this market could end up screwing us, and because we're really kind of on pins and needles, worried about what these inflation numbers are going to look like. Because one of the biggest conversations happening right now is whether or not the Fed should lower interest rates, and there's a big argument against that. And if you notice in this article that I just read to you, basically what they're saying is that that's the question of the day, right? Um, that basically the people are wondering, okay, is the Fed going to lower interest rates? If so, when? And if there's any indicator that they may not do that, well, that's going to lead to a big adjustment in the market. And what's happening is that the inflation data is being released this week. And if that data is bad, like if that data shows on any level that inflation is out of control or starting to grow, oh, that's going to significantly reduce the probability that the Fed will reduce interest rates, which will then lead to a significant market decline because the market has already anticipated that the Fed is going to give them Christmas. So what you can do is leave your questions in the Q&A section. I'll answer all your questions. And also, I'm going to give a profit alert in terms of some stocks that I like, particularly if you see the correction. If you see the correction, that could be good for you, right?